What's up guys, it's Andrew here from Pennant Players back with another video. Today we're going to be going over the 180-day simple moving average, also known as the SMA, how to use it in your trading, and what it is. If you like this video, please be sure to like, subscribe, and share for more. So what is the 180-day SMA? Well, the 180-day SMA, or also known as the simple moving average, is essentially just a collective of all of the price action. So we can see here that it collects all the different data points at how it's been trading, and then calculates the moving average, essentially the average price at that period of time in relation to the last 180 days. So as you can see, it works best in the specific time frame that you're using it. So if you're using 180-day simple moving average, I like to use it on the 180-day chart because it matches up well. However, you don't have to. This is just an example and how I specifically like to use it, just because it lines up well. But again, you do not have to. Now, how do you use this in your trading? Well, a crossover of the 180-day simple moving average is thought to be a very either bullish or bearish signal. It tends to be something that's quite strong, something that's quite reliable in terms of the overall trend direction, and possible trend reversals if there is a crossover. Now, I have an example here of DAL. So what are we watching out for? Well, we are watching out for breaks either below or above the simple moving average in places where it has been trading for a good period of length, either above or below. In addition, we can also see that the price is going to want to tend to retest that simple moving average. So it's going to want to go up to it, it's going to want to touch it, and it can either break through it or break below it, or it can touch it as a test and then fall back down or go back up, if you will. So we can see this play out here on DAL. Delta Airlines, you're probably familiar with the ticker symbol. And we can see this 180-day simple moving average technique play out perfectly here. We can see that right here on this 100-day SMA, it has been trading well below it. So we know this is going to want to have a inclination to go up and retest that 100-day SMA as a resistance level. Now we know the typical resistance levels rules apply the same as the 100-day SMA. So we can either use that in one of two ways. We can utilize that in order to find an exit point, so buying low and selling high, or we can wait for a cross above it and buy high and then bet on a continuation pattern, that it breaks above it and it's going to continue up. So you can see here on the 180-day SMA and the 180-day time frame that it has been trading well below this SMA here, and it wants to retest it. So it retests it here, touches it, and then goes right back down. So we can see this is a very, very bearish signal once it goes up and then falls right back down under it. So this would be a short right here. In order to, this would be, it falls down about 25% after the retest failure. The other way to play this, as I said, is to bet on a continuation after a break of the 100-day SMA. So, for example, after that retest failure, it tests it again here, consolidates, breaks above, dips back down. You can see that after that break, continuation, and then break of the 100-day SMA, a large move up, about 65% upward. So again, this is a very strong signal. Once it broke and stayed there, that we are in a bullish trend. Now we can see here that once it's trading below, it goes up, tests it, goes down, breaks below it again. Immediately, this is a bearish trend. Now you can see here, once it crosses below it, this is now, once it hits this SMA, we're going to want to look for either a breakdown or a retest, then shoot up again. So crosses down here, we're now at the 100-day SMA. We're going to want to look to see how this is going to play out. There is one of two options. Either we're going to want to see a move up here, a test of this 100-day SMA, because it's going to want to touch it, it's going to want to test it, and we could possibly see a bounce off that SMA. Now, the other possibility, which is what wound up playing out, is a break below it, causing a bearish trend. So we can see here it crossed below this 100-day SMA in blue, and then went down about 10% after that. And then once it's here, it starts moving upward again, because again, once that cross happens, it's going to want to retest it at some point. So it retested it right here. If we zoom in here, we can see this retesting of the 100-day SMA as it has previously done. So we can see here, once it crosses below, at some point it is going to want to retest that 180-day SMA to see if it will break above it now to create a bullish trend. But right now it is in a bearish trend, so it is going to want to touch it and retest. So it starts moving up, it retests at a failure. So it fails to break out, and now we continue with the bearish pattern with a move at about 10% downward after that test failure of the 100-day SMA. So I hope this was a good overview of the SMA. Again, just keep in mind that we're looking for either testing failures to cross above or below to see it retouch that SMA and then bounce back, bounce either up or down, and see a continuation of the previous pattern, or we're looking for a break of the 100-day SMA, which can cause a breakout in either direction, simply depending on where it's coming from. So if it's coming down and breaks that SMA downward, we're going to want to see a continuation of that breakout downward. If it's coming from up, touches it, breaks above it, stays there, we're going to want to see, and we're probably going to see, a continuation and that turn into a very bullish trend. So again, I hope this is helpful. If you want more, please be sure to like, subscribe, and share, and stay green, guys.